Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, dubious speculation. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out the sale on Into the Cryptoverse Premium at intothe.cryptoverse.com. Link is in the description below. Let's go ahead and jump in. So in this video, I just want to go through a lot of the different indicators and levels that we've been looking at over the last several months, provide an update on where we are today, and just take it from there. As far as the spot ETF stuff goes, I just want to remind people I have no idea, the resolution of that, whether it's going to be accepted or rejected. I have no idea, and frankly, I don't really care. Okay, so we're just going to look at the charts and stick with that, and hopefully it's useful to you guys. So the first thing is we did get a little bit of a drop this morning. It's funny because, while we did get a drop, the weekly candle as of this point is still green, but this drop was about an 11% drop. So, I mean, it is enough to get people's attention, right? It's enough to sort of get the blood flowing and make you wonder, like, is it something more, or is that it? Now, what's fascinating to me is when we think about Bitcoin price history, one of the things that you may remember is that volatility is not something that Bitcoin shies away from. And in fact, back in like 2016, 2017, Bitcoin had 30, 40% corrections, right? This was a fairly normal thing for Bitcoin to get. In 2019, when we had some of these corrections, we had, 20% corrections or so, right? That was a 13% correction. This correction right here, this was about a 20% correction. And then there was a larger correction of 72%. But you might say, well, that was because of the pandemic. But before the pandemic even was a thing, there was still a 50% drop. But what's interesting is so far, there has not been a 25% correction in over a year, right? And it's kind of weird to believe. I mean, it certainly feels like there has been, right? I mean, if you think back to everything we experienced in 2022, if someone told you that Bitcoin did not have a 25% correction during that time, it would almost be hard to believe. Like, it's like, well, how could that possibly be true that it did not have even a 25% correction? And, you can go take a look, right? I mean, there's three main areas where the price of Bitcoin corrected. In February, you can see right here that Bitcoin had a 22.5% drop or so. We then had another drop right here in April that lasted until June. That was about a 20% drop. And then we also had another drop right here that started in July and lasted until September. That was about a 21.5% drop. So Bitcoin essentially had three 20% drops in 2023. Nothing more, right? Nothing really more. No 25% drops. And so, because even in recent history, we've seen Bitcoin has dropped 20%, it's always relevant to think, well, where would a 20% drop even put Bitcoin from the most recent high, just to keep that level in the back of your mind? A 20% drop from this high would put Bitcoin right around 36K. 36, 37K. If it were to go down to 22%, which is what, one or two of those last corrections went to, it would put it back down to about 35K. So a pretty big drop. Now, one of the things we've talked about many, many times is the bull market support band and the 8-week moving average. Okay, these are two very important levels that we've discussed in the past, that 8-week moving average and the bull market support band. Now, the reason why we talk about the bull market support band is because oftentimes Bitcoin will pull back to that level, right? You can see it had a pullback to that level right here in March. It had a pullback to that level in June of 2023. We broke that level in August of 2023, but we also said we were likely going to break it back then, because normally in Q3 of the pre-halving year, we go below the bull market support band. That is nothing new. We went into that with that expectation. I was actually surprised that we did not take out this low right here, right? We actually came really, really close to it, within $100 or $200, but we did not actually take it out. So when we look at price action today, and just keeping in mind prior moves that we've seen, nothing out of the ordinary, from this wick here down to the bull market support band to the 21-week EMA is about a 20% drop. To the 20-week SMA, it's about a 25% drop, right? So that would still be in line with what we've previously seen. Now, there is the 8-week moving average that is currently at just below $41,000. Now, the 8-week moving average is important because we've sort of watched how in some of these prior uptrends, that 8-week moving average will hold support. But once it breaks, things can become testy, right? You know, sometimes you get below the 8-week and you hold support at the 20-week SMA. Other times you get below it and there's nothing, you know, there's no real fight by the bulls to hold the line. So far, remember, the 8-week moving average is at around $41,000. It's just below $41,000. Okay, so if you start to see weekly closes below 41K, that would imply that at the very least, you could start to see a pullback to that bull market support band. So let me show you what I mean. So if you look back, every time we've dropped below the 8-week, we then went to the bull market support band or lower, at least in this move that we've seen here over the last year or so, right? Going below the 8-week SMA right here eventually led to the bull market support band. And then going below the 8-week SMA right here eventually led to the bull market support band. So that is the question, is do you get a weekly close below that level or not, right? So if you don't get a close below that level, then nothing's really changed, right? I mean, nothing's necessarily really changed at that point. There's been plenty of times where we sort of went sideways into the 8-week SMA, maybe got a fake out, but then still continued higher. There's examples over here as well. But you can see that a lot of times when the 8-week moving average is lost, it's normally just a simple matter of time before we test that 20-week SMA. Okay, so that's the first area that I would say is important, is that 8-week moving average just below 41K. Weekly close below that likely means we're going back down at the very least to the bull market support band. Now, in the short term, who knows if this is even the local high? It could be, right? It certainly could be. And there are reasons to believe that it could be. There's also reasons to believe that it wouldn't be. But I will say, no matter what your bias is, if you want it to be the high, you'll find a reason for it to be the high. If you don't want it to be the high, then you'll find a reason for it not to be. And I'll show you a couple of examples, okay? So, for instance, if you wanted to go into this and try to figure out a reason why it could be a local high, you could take something like a Fib retracement tool. Now, you might say, well, Ben, I mean, we've looked at this before. We've looked at it compared to both peaks. But if you look at the second peak, you can see that the level has gone up. It hasn't even reached the 618, right? So the 618 would be at around 48.5K, 48.5K is where the 618 Fib retracement level would be, which we clearly have not yet reached. A counterpoint is to say, well, what if the first peak is where we should be measuring it from, right? So if you measure the Fib retracement from the first peak down here, you actually can see that it went to the 618 and then basically came all the way back down to the 0.5 retracement, right? So a pretty clear local rejection at the very least, right? So that, I think, is one thing to look at. Another thing that's kind of interesting to me is we've talked a lot about, the idea of a mid-cycle top. And the reason why we've talked about that is because when you look at interest rates, and we just look at say like the prior cycle, and again, like if you've been watching my videos, you already know what I'm going to say. But the general idea, as we've discussed many, many, many times, is that there is a reasonable chance, not something to take to the bank, but there's a reasonable chance that Bitcoin puts in some type of mid-cycle top around the time that rate cuts begin, or maybe just before rate cuts begin. Okay? Now, the market currently thinks that the first rate cut is not going to happen until March. I don't know when it's going to happen. It could be March. That's probably, that's probably the base case. It could be May. It could even be January, depending on where the jobs data comes in this week, right? I mean, like if the unemployment rate prints 4%, then maybe they would even cut in January. But for now, the base case still remains March. If you think about where Bitcoin put in its mid-cycle top last cycle, it occurred a few weeks before rate cuts began, right? So local high, then rate cuts began, and then we bottomed out after rate cuts ended, essentially, or around that time. So that's one reason to sort of be on the lookout, right? On the lookout for something like that. And, it's so hard to know if it's already occurred. It's hard to know if there'll be some type of, approval with the spot ETF, and then everyone will just rush in and lead to then a final move before a larger pullback. I don't know. I really don't. But I will say that, sort of the thesis that I've talked about for a long time is some type of mid-cycle top just as rate cuts arrive. Now, that might seem counterintuitive. Rate cuts would imply looser monetary policy, which therefore should be good for risk assets, right? Well, a lot of times, the reason it's not good for risk assets is because the Fed's not normally willing to cut enough in order to make a difference. If you think about it, why would the Fed cut if the economy is strong, right? If you think about it, why would they cut? It's probably because they think that the economy is not as strong as some of the data would maybe lead you to believe. And so what they'll often do is they'll start cutting ahead of that. Now, if they start to cut, it's sort of an acknowledgement that the economy is starting to show signs of weakness. But the issue is if they're only going to cut 25 basis points or 50 basis points, it's not like that's going to move the needle on the U.S. economy. You would probably need several hundred basis points for it to actually make a difference. So that's often the reason why when you get rate cuts, the market doesn't even find a local low, because it's just simply not enough to move the needle. So that is the question: is this playing out in a similar manner where we find some type of local high just before rate cuts begin? So I would keep an eye on that 8-week moving average. And if we fall below it, then the bull market support band is where you would look to. If we hold the 8-week moving average and we get weekly closes above it for the next couple of weeks, going into whatever the resolution is to the spot ETF, then you could always make the case of Bitcoin's price still staying strong for a little bit longer before a larger pullback. And you might say, well, does Bitcoin have to have a larger pullback? Well, one of the things we've mentioned is that, oftentimes you will see, after a move higher, you will get a cool-off period. And you can see right here, like if you take it from this low to this low, it's about 15 weeks. This low to this low was about 14 weeks. And then that low to this low right here was about 13 weeks. So you got about 13 to 15 weeks between these prior lows, and we're already at 16 weeks. And there hasn't really been a drop at all. I mean, there was this drop right here. So if you want to say that that was the drop, then it occurred after 13 weeks. But if that is all that you get, then clearly the market is sort of deviating from the pattern that it was, that it was previously, sort of respecting about what, 3 to 4 months between these, between these larger drops that always corresponded with interacting with the 20-week SMA and or 20-week EMA in some way. Okay, and again, the 20-week SMA is at 33,900. The 21-week EMA is at 35,800. So it's a pretty big spread there, about a $2,000 range, and it, it's still well below where we currently are. So that's so relevant. I think to think about is if we drop below the 8-week, that is where I would in fact look. Now remember, if you look at the Fib Retracement tool from the first peak, it gets you, right? It shows you that we've already gone to the 618. If you take it from the second peak, right? If you take it from this peak right here, We haven't, right? And it would be all the way up at like 48.5K. So a much higher level than the current prices if it were to make it to the 618 from the second peak. But it's impossible to know, if one is more relevant than the other. And it's also fair to say that those retracement levels might not play out at all anyways. So I just want you to see that in terms of these prior moves, if you look at, like, say, the short-term bubble risk, we talked about, something similar happening where, you get that first move up and then you get a larger move up. But remember, this peak here on the extension from the 20-week moving average did not correspond to the high. You can see that a few weeks later, we put in a slightly higher high before fading to that bull market support band, right? And so far, the same thing has happened because, this is a slightly higher high. And, the question now is does it fade back down to the 20-week SMA over the next few weeks? So that's basically what happened over here, right? Is you got your first move up. The extension from the 20-week was what, like, so if you take it from down here, the extension was about 40% or so, just like it was right here, right? About a 40% extension. But in both cases, while it extended 40% from the 20-week SMA, it did not mark the local high. And in fact, the local high occurred here 4 weeks later. So we're now at 4 weeks later. So are we here, right? Are we right here is the question. Is it emulating what occurred earlier in the year where you get your initial spike up 40% above the 20-week SMA, you consolidate for a few weeks, and then you get a larger push up, but the extension for the 20-week is not as much as it was during the initial move, and then it fades back down. So that I think is what to look for. And look, if the spot ETF is rejected, then of course that would be a great narrative to sort of accompany Bitcoin price action back to the downside. If it's approved, then you could always take out, the local high. But, or maybe it's just to sell the news. I don't know. But that I think is sort of things to look at and say, well, look, I mean, this is what happened last year, and maybe it'll happen again. It's funny because, again, people, a lot of times it's hard to imagine, for a lot of people, it's hard to imagine the price going back down if it's only been going up for, 2 to 3 months straight, and then Bitcoin, it can eventually make that move. I also wanted to mention that you still have your logarithmic regression. This is the fair value logarithmic regression band, and what's interesting is, it's basically getting hung up right here at that fair value. This thing was fitted back in like 2019, so forgive me for this right here. I mean, this was also below right here, but it's interesting because this level is the same level it got rejected at right here. So it's Bitcoin's struggling to get above that right now. If you look at the regression rainbow, you can see that it's struggling to do the same thing, right? Like, to get above this band right here. That's sort of where it's still stuck between. Which coincidentally corresponds to the 2.5 log line rule from this peak right here, which is 2.5 log lines below this peak, which is 2.5 log lines below this peak, which is 2.5 log lines below this peak. So it's interesting how this is playing out. Now, I know what you're all thinking. You're probably like, well, how does the Bitcoin dominance play in this? Well, I'm glad you asked. So, the Bitcoin dominance is it's currently at 52.6%. If you followed my stuff for a while, you'll know that I've said before that what you'll likely see on larger pullbacks is Bitcoin dominance going up. This is a great example, right, where Bitcoin is down, but dominance is slightly up. If you think back to 2022, there were many times where Bitcoin would drop and then Bitcoin dominance would go down. Now you're seeing periods where Bitcoin drops and Bitcoin dominance goes up. And in fact, if you look closely at this wick by Bitcoin, you'll see that it's actually, it went slightly below this wick from December 18th. Not as bad as the wick from December 11th. But if you look at like Ethereum, look what's going on. I mean, this wick takes you all the way back to November 7th. So the market's getting a little jittery, right? I mean, there's no There's no denying it. I mean, this is, and again, we'll get into this in a minute, but Bitcoin is relatively stronger than the rest of the asset class, okay? Relatively, than the collective altcoin market. Yes, I'm sure there's some altcoins that are up today. You know, I'm sure there's plenty that barely even blinked on this drop. But we know that most of them saw a larger drop than Bitcoin because the Bitcoin dominance is up. Okay? So the thing that I go back to, and I go back to it time and time again, especially as it relates to the dominance of Bitcoin, is, you know, what's going to happen if you do get a larger pullback, right? What would happen to the altcoin market? And I mean, as you can see today, the altcoin market is a lot more jittery than Bitcoin. I mean, again, look at Bitcoin's drop compared to this move over here, and then look at Ethereum. Yes, I mean, it's recovered a lot of it, but this is a big wick, you know, and this is a big wick. And so was this one, where Bitcoin dropped 11% today. Ethereum, that was a 22% drop, right? So one of the things that I've mentioned before is that, and again, I get into a lot of trouble for saying this, and it's a great dunking point for my critics. But one of the things that we have seen in the past, there's no guarantee that it happens this time, but one thing that we've historically seen is a secondary scare. I have no idea if it's going to happen. I've seen it happen many times, and when it has happened, basically no one thinks it's going to happen because we've only gone up for so long that everyone thinks that it's immune to ever going back down. And so what ends up happening is the Bitcoin gets some type of like 50% correction just when no one's expecting it, right? Like just as everyone's saying buy the dip, then you get a larger correction. And so I don't know if it's going to play out like that or not. I gave, you know, I talked about it a lot, that sort of the window for it would be from Q3 of last year through about the first half of this year would sort of be that window. If it's going to happen, you would expect to see it happen. But we'll see. I mean, there's certainly no guarantee. And, you know, to be intellectually honest with myself, a move back to 38K or 35K is not a scare. I mean, this is just what we've seen, right? A move from 46K to 38K is 17%, right? You could go down 22% and still be at 35K. Hell, even a move back to 31K would not be considered, in my opinion, sufficient to label it a secondary scare, right? It just wouldn't be. And the reason is because, I mean, like look at 2016. Bitcoin had a pullback back to the spot that it finally broke out from, right here, right? And maybe I should, right? If you see that, right? So eventually, you know, it broke out here, and then eventually it retraced all the way back. I don't look at that and say, oh, well, there's a secondary scare, right? You don't, it's just not, it's not a valid way to look at it. In order for the secondary scare to be something that would be acknowledged, you would have to take out a prior low in the structure of the market. And I'm not saying it has to be this low, but it would need to be, you know, a significant low for it to really be a scare, okay? If that happens, then it's playing out like it always has. Like it's playing out how it did in prior cycles. If it doesn't happen, then it's deviating from prior cycles, right? Because like you can see over here, this drop, I mean, it even if you exclude the pandemic, it took out that low. If you go back, you know, to this over here, this low took out that one. So that is something that has historically happened. Now, one thing to consider with all of this is that, you know, if you go take a look at, let's go take a look here at the social risk. So the social risk is interesting because, you know, it sort of came back up to that 0.3 risk level, but it hasn't durably broken above that. So I'm still of the opinion that we're kind of at this phase of the cycle, right, where social risk goes up as some people come back to the market. But what if in the same way that it happened last cycle, while you get up to that 0.3 risk level, it then sort of fades back down as rate cuts arrive. So I still think that that's going to be my base case, that we're just in the process of a mid-cycle top, whether it's already in or whether it comes within a week or two, or maybe in a little longer, I don't know. But I'm still of the opinion that that's kind of where we are, and I will continue to sort of think that until proven otherwise, right? And I'm open-minded. I'd like to think I'm open-minded to being proven otherwise on that, but it certainly hasn't happened yet. So with Bitcoin, some of the other things that we've looked at, like if you go look at, so if you go look at the running 1-year ROI, this is another interesting way to look at Bitcoin. So I actually clicked on Ethereum. If you look at the 1-year running ROI, you can see that the current 1-year ROI is actually at levels that we have had, some pullbacks from. And it's not just because Bitcoin price has to go down, but it's also because when you look at the reference point a year ago, price was starting to go up. So if the price does not go up commensurate with what was going on a year ago, then the 1-year ROI will likely start to come back down. So my guess is over the next few months, you will see the 1-year ROI come back down. The only way that doesn't happen is if Bitcoin goes up quickly enough to keep pace with the price appreciation that Bitcoin had a year ago, okay? The other thing that you can look at are monthly returns and look at it for, let me switch this over to crypto. But if you look at monthly returns and just look at, say, like a monthly count, and you add one when the monthly candle is green, subtract one when it's red, interestingly, we're at a monthly count of 24, right? Which is where the monthly count was back in March of 2021. And you can see the monthly count topped out at 2020 or at 23 in 2018, or sorry, like late 2017, early 2018. So I think that's an interesting way to look at the market too. By the way, if you're curious what this chart is, it's sort of just looking at the ROI to low after inversion of 3-month 10-year yield for the S&P 500 compared to the financial crisis. But I don't really think that these analogs never repeat, right? They all look the same until a certain point, and then they deviate. Okay, so I wouldn't put a ton of weight into this stuff, but it is just something to sort of think about. So I'm trying to think if there's some other charts that we should, briefly talk about, or if that's kind of, if this is the other one I think that you could take a look at, and that's basically just comparing this cycle to the last couple of cycles, and this is kind of where Bitcoin is compared to the last couple of cycles. So you can see that last cycle there was a pretty big drop. Cycle before that there wasn't, and so a lot of that depends on if Bitcoin does it get that recession, or does it get that secondary scare, or does it not? And that's something we'll have to we'll of course have to wait and see. So I suppose what I'd be looking for over the next few weeks are, does the 8-week moving average hold? If it doesn't, then there's a good chance we're going to the bull market support band. Okay, so if the 8-week does not hold on the weekly time frame, then we're likely going to the 20-week SMA, because that's what normally happens when the 8-week is broken. You'd be hard pressed to find a time where the 8-week doesn't breaks and then doesn't eventually visit within a few percent of the bull market support band, right? Like, it doesn't always happen, but a lot of times it does, right? Like, a lot of times it does happen. And I'm sure we can find examples. And even you can see even over here, it happened, like right here, breaking down below there. Here, when it did it, there was, this one's an example of really where it wasn't, but it came within a few percent. So that, I think, is what you should watch, right? If we break below the 8-week, then the 20-week SMA is definitely in the cards. And if history is any indication, breaking the 8-week SMA, if we do go down to the bull market support band, that's about a 22% drop, which is in line with what we saw with these drops over here. Now, the question, of course, is if we do drop to the 20-week SMA, would it hold as support, right? That's the bigger question. And I think the answer to that will ultimately depend on if the Fed achieves a soft landing or not. If the Fed achieves a soft landing, then, you know, there's hope. But if not, if they've over tightened, which is a real possibility based on the context of history, then you could go below that, and then you could potentially come back in and retest this level. And it just depends on how far the Fed went, and you know how far the Fed funds rate potentially is above the neutral rate, right? So it depends on a lot of things as to as to whether Bitcoin would hold that as support or not. And you know, as Bitcoin gets this move, it'll be interesting to see how Bitcoin pairs behave, like how Ether Bitcoin behaves during a move like that. Because so far, as we pointed out earlier, during these corrections by Bitcoin, it seems like Ethereum's getting somewhat jittery, right? I mean, it's like Bitcoin sneezes and ETH goes down 20%. It's kind of interesting when you think about it, because one way to think about the market is think about, you know, who makes up, you know, the market participants. Think about it like the social risk, right? Like, so go to the social risk. You know, when we were over here, there were not these big wicks, right? Not like daily wicks in the same way. Like, you weren't getting like 20, 30% or 25% flushes in a single day that frequently, right? I mean, it was mostly trending up. But what happened? Like, what changed in December? Well, perhaps what changed is the social risk going back up. So basically, like, retail coming back and sort of YOLOing in, and then getting spooked the minute that it drops, and then selling, and then leading to a liquidation cascade, which is often where the secondary scare materializes from. Is, you know, people late to the party come in, they buy the local high, they get scared, and then they panic sell. And if it ends up being a mid-cycle top, then it could be a larger correction, just like in 2019. But we'll see. You know, those are my general thoughts on the market. I think you guys pretty much know where I stand on the market. I don't think it's not really that surprising. I think my views, I think we're near a mid-cycle top is my guess. I don't know if this is it or if it goes a little bit higher. But once that's in, then I think we have to figure out, all right, how much damage did the Fed do? How, will they be able to cut quickly enough to sort of lead to a soft landing or not? And that's where I currently stand. So if you guys like the content, make sure you subscribe, give the video a thumbs up. But again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com, and you can get access to these charts that we've been talking about. Right? You can get access to those and peruse them at your leisure. We'll wrap it up. See you guys next time. Bye.